For many elderly homeowners, the equity in their homes represents their largest asset, created through a lifetime's hard work and savings. Unfortunately, this makes seniors a target for predatory lenders and fraud perpetrators who seek to take advantage of them. We convene today to discuss serious concerns about lax oversight in this program that is leaving our nation's seniors vulnerable to predatory practices, leading to potential fraud and victimization. Further, not only are seniors the victims of reverse mortgage fraud, but taxpayers are also, because as I just indicated, we in fact are on the line as insuring these mortgages. I'm deeply concerned about these issues. 10,000 baby boomers become eligible for reverse mortgages every day. 81% of them own their own homes. These seniors are sitting on $4 trillion of equity in their homes. That equity is of great interest to some mortgage entities. Some have the best interests of seniors involved, but others do not. When it comes to our nation's seniors, this is a particularly troubling position. As we all know, many seniors are more vulnerable than the average population. They may be lonely or afraid, not have family members nearby that they can consult. They may have diminished capacity. They are trusting and believing the integrity and honesty of others who may not always have their best interests at heart. We have a responsibility to make sure this incredibly important part of our population are not preyed upon, and we should not create mechanisms that allow this to happen. We are also now seeing predators of a different nature. These persons target the very program itself, trying to game the system in the same fashion that has previously caused turmoil in our housing market. Let me explain. Like the subprime market, lenders and originators in the reverse mortgage market reap large commissions but face little risk when writing these mortgages. This is because nearly all reverse mortgages are insured by the Department of Housing and Urban Development, your government. Once the value of the loan reaches the value of the home, lenders assign the loan to HUD, who then becomes responsible for the differences in the loan amount and the fair market value of the house. This leaves the program vulnerable to fraud schemes like flipping and the recruitment of sham buyers, which HUD's Inspector General has been fighting. I look forward to hearing from Mr. Medici. Did I pronounce it correctly?
That's fine.
From the HUD Inspector General's office about these issues, and thank him for the superb work that HUD IG is doing in this field. Further, the patchwork of regulation that is supposed to protect seniors and taxpayers appears to have left both uncovered, resulting in a recent request by HUD for an additional $800 million in federal funds to cover losses that I warned about in earlier hearings. And as we continue this discussion, we must not lose sight about what and really who we are talking about. These are our parents, our grandparents, our neighbors, our friends. It is the individual reports about how these seniors are targeted that gives me the most passion and the most drive to continue to investigate these issues. And so it is people like Mary Heinzer of St. Louis, Missouri, a 79-year-old widow who was persuaded to take out a reverse mortgage in order to repair her leaky roof, and then relied on the sales agent to arrange for the repair, but was ultimately left without any remaining home equity and a roof that continues to leak. First, Ann Jedicke? Jedicke. Ann Jedicke is the Deputy Comptroller for Compliance Policy in the Office of Comptroller of the Currency. She is responsible for the policy and examination procedures relating to consumer issues in anti-money laundering. Matthew Skyer, am I saying that correct?
Sheree.
Oh my gosh, you guys did this to me on purpose. All these names are hard. Sheree is the director in GAO's Financial Markets and Community Investment Team. He's responsible for leading the GAO's audit work involving housing programs. His team are focusing on a wide range of issues, including HUD's reverse mortgage program, Treasury's loan modification efforts, and Public Housing Agency's use of Recovery Act funds. Anthony Medici is the special agent in charge at the Criminal Investigation Division, Office of Inspector General, Department of Housing and Urban Development in Washington, D.C. He's responsible for oversight, coordination, assessment, and analysis of the Office of Inspector General's Office of Investigation field activities and initiatives throughout the country. He is substantially involved in policy, program, and operations issues for the Office of Investigation. Why are the proprietary reverse mortgages dormant right now?
Well, I think there's a general lack of interest in the proprietary product because of the real estate market today. The fact that housing prices are depressed. There's less equity in people's homes than there might have been 2 or 3 years ago.
So I want to make sure I understand this. When the banks are on the line and have the risk, right now they're not doing these kinds of loans.
No, banks are not doing proprietary reverse mortgages. Banks are doing the HECM reverse mortgage.
Where they have no risk.
They're not on the, no.
Right now in this real estate market, because of the fluctuation of home valuation, these are too risky for most banks to engage in right now because of the fluctuating home values in the housing market. But yet, we are, if I understand the testimony so far, we're at a record pace for reverse mortgages that the government takes the risk on. Is that correct?
That is correct, Senator.
So, what the bank doesn't want to do, because it feels risky, they're more than happy to do when the taxpayers are on the line, is what am I characterizing that correctly, Mr. Medici?
I think you are, Senator.
Okay. Is it a fair assumption to say that we're on track to double the number of reverse mortgages that are under the HECM program this year as opposed to last year?
As of May 14th, FHA had endorsed approximately 68,000 HECM loans. So we think we're on pace with last year's. Over the last several years, the pace has been well over 100 to 110,000 loans. I think we're on pace to meet that again.
Okay. Is there an aggressive program in HUD when you determine that there has been a fraudulent appraisal, that you all go back and pull all the appraisals done by that individual and examine all of those transactions? Are you pulling that thread?
Well, usually in an investigation, if we see that the evidence is going in that direction, we'll try to uncover as much of the pattern of activity as we possibly can.
How are these straw buyers being recruited, and what are they being told? Have some of these cases been prosecuted?
We're working towards that goal right now. They're actually rather substantial, so we're still peeling back the onion, so to speak, in these cases. But we understand it being recruited on the internet through free seminars, through flyers, signs on the street, typically with the promise, live rent-free forever, or get a free home from the government or government program. All they need to be is 62 or older, really, to meet the qualifications. They're recruited in to be a nominee or a front for the scheme organizer.
Does typically the person who's recruited, do they get a cut of the fraudulent proceeds?
It depends. Right now we're trying to sort out what the level of complicities are, but in some cases they're just happy to get the property and be left in that.
So what could actually happen is that there's a tail on this fraud, right? Because if you recruit someone and put them in a home with a false appraisal and you pull the money out of the house based on the false appraisal, and the person gets the money and walks away, the perpetrator of the fraud, leaving the straw buyer in the house, that when really no one figures out that the house is not worth what the appraisal said until that person either dies or moves out, and then the only person left holding the bag is the taxpayer.
That's correct, and that's one of the peculiarities of reverse mortgages. It could be some time before we become aware.
We will come up with some specific recommendations based on the testimony today, some which may be agency-driven, some may be for more work at GAO, some may be some help with trying to get the FTC more actively involved, and obviously the HUD IG is going to continue to be very involved in us trying to track the potential problems with these very specialized financial tools that can be a help and a lifesaver to some people, but also can be a nightmare of huge proportions.